Hello everyone and welcome to Ticker.com's news channel on YouTube. On this channel, we review stock markets, discuss financial news, market trends, and economic data from Wall Street to Global Street. So let's dive in. We begin our weekly review of economic data with the U.S. inflation reports. Consumer price inflation on an annual basis advanced in September and matched the pace in August, and the increase in housing prices drove half of the inflation in the month. Core inflation has dropped to the lowest level in 2 years. The Consumer Price Index, a measure of overall inflation, rose 0.4% in September and jumped 3.7% from a year ago, the U.S. Bureau of Labor Statistics reported Thursday. Core inflation, which excludes volatile food and energy prices, increased 4.1% from a year ago, the slowest pace of increase since September 2021. On a monthly basis, overall consumer price inflation declined to 0.4% from 0.6% increase in the previous month, and core inflation held steady at 0.3%. The Producer Price Index rose 0.5% in September from the previous month and slower than 0.7% in August, the U.S. Bureau of Labor Statistics reported Wednesday. However, wholesale inflation on an annual basis accelerated to 2.2% in the month from 2% in the previous month and advanced for the third month in a row. The annual increase in wholesale price was the largest since the gain of 2.3% in April. We now turn our attention to Europe. In Europe, inflation news dominated headlines, and Germany, France, Spain, and Sweden reported monthly inflation updates. The German consumer price inflation was confirmed at 4.5% from a year ago in September, and sharply lower than 6.1% rate in the previous month and the lowest level since Russia's invasion in February 2022. The core rate of inflation, which excludes volatile food and energy, slowed to a one-year low of 4.6%. French annual consumer price inflation was steady at 4.9% in September and matched the rate in August, the statistical office INSEE reported confirmed Friday. On a monthly basis, consumer prices eased 0.5% in September, reversing 1.0% increase in August. The statistical agency confirmed the flash estimate report released on September 29. Spain's consumer price inflation increased to a 5-month high of 3.5% in September from 2.6% in August, the statistical office INE reported Friday. Inflation picked up after transportation prices advanced 3.8% in the month compared to a 1.2% in August, and food and beverages inflation held at 10.5% and matched the rate in the previous month. The housing and utility prices inflation eased to 13.1% from 18% in the previous month after electricity price inflation eased. Core inflation, which excludes volatile food and energy prices, eased to 5.8% in September from 6.1% in August, and overall inflation on a monthly basis eased to 0.2% from 0.5% in the previous month. Let's review economic data from Asia. In Asia, inflation and international trade data from China led the market attention. Investors also reviewed inflation data and international trade deficit data from India as well. China's consumer price inflation was flat in September, the National Bureau of Statistics reported Friday, compared with 0.1% increase in August. Core inflation, which excludes volatile food and energy prices, edged up 0.8% in September and matched the rate in the previous month. Despite the hopes of stronger economic rebound, China's inflation for the first 9 months rose 0.4% from a year ago and significantly lower than the government's target of 3%. Moreover, China's Producer Price Index declined 2.5% in September, smaller decline than 3% fall in August. The measure of wholesale price inflation has fallen for 12 months in a row. Economists and policymakers worry that China may face deflation or very low inflation after consumer price index dropped in July for the first time since July 2021. Weak domestic demand recovery and falling exports added to market anxieties as Chinese government focused on deleveraging government debt. China's exports declined for the fifth month in a row, and exports to leading trade partners fell. Exports declined 6.2% to $299 billion in September, slower than 8.8% fall in August. Exports to ASEAN region fell 15.8%, and to the United States fell 9.3%, and to the European Union decreased 11.6% from a year ago. Exports to the United States fell for the 14th month in a row. China's imports fell for the 7th month in a row and dropped 6.2% from a year ago to $221 billion in September. The decline in imports largely reflected the fall in prices because import volume remained nearly unchanged. China's trade surplus rose to $77.7 billion in September from $68.4 billion in the previous month, after imports declined more than exports. Economists anticipate trade surplus to continue to shrink as orders began to dry up after the delayed impact of higher interest rates are felt in the U.S. and in the European Union. The consumer price index eased to 5% on an annual basis in September in India, the Ministry of Statistics and Program Implementation reported Friday. The annual pace of retail inflation eased from the 6.8% rate in August after food price inflation weakened to 6.6% from 9.9%, and housing cost eased to 4% from 4.4% in the previous month. The overall inflation fell within the 2 to 6% range, a target range set by the Reserve Bank of India for the first time in 3 months. India's goods trade deficit declined to a 5-month low of $19.4 billion in September, the Ministry of Commerce and Industry reported late Friday. Exports declined 2.8% to $34.5 billion, and imports dropped 15% to $58.8 billion. We now review global financial markets, and stock market indices advanced for the second week in a row despite the worries of a resurgent inflation and another rate hike in the U.S. Investors are focused on third quarter earnings, and expectations are high that most companies will deliver better than expected earnings because of resilient economy, sustained consumer spending, and elevated level of government spending. U.S. Treasury yields rebounded after easing in the previous week following the consumer price and wholesale price inflation reports. Crude oil rebounded 6% in the week after tensions flared up between Israel and Hamas, and the U.S. placed additional sanctions on Russian tanker owners transporting oil above the G7 price cap of $60 a barrel. Natural gas prices in Europe soared 40% on supply worries after Israel asked Chevron to stop or halt production at a gas field near the northern region of Israel. European markets eked out gains for the second week in a row as investors confronted twin worries of rebounding inflation and higher interest rates. The euro held stable in the week, but currency faced headwinds after rising yields on the U.S. Treasury forecasted another rate hikes. The yen struggled and hovered near its 11-month low level, and currency traders worried that the government is more likely to intervene in the weeks ahead. Gold rebounded in the week after tensions rose in the Middle East and the Israeli army prepared for its invasion and ordered evacuation of 1.1 million civilians from the northern region of occupied Gaza. The S&P 500 index and the Nasdaq Composite advanced for the second week in a row despite the worries of higher interest rates. Stock markets in Japan rebounded sharply and halted a 3-week slide after investors searched bargains in the tech sector and export-driven conglomerates. We now review merger updates. Microsoft finalized a $69 billion purchase of Activision Blizzard after announcing it 20 months ago and undergoing a lengthy review process in the US, the UK, and the European Union. ExxonMobil agreed to acquire shale oil producer Pioneer Natural Resources for $60 billion or $253 a share, and hopes to double its energy production in Permian Basin. Bristol-Myers Squibb agreed to pay $4.8 billion or $58 a share for cancer treatment provider Mirati Therapeutics. The UK-based restaurant group, the parent of restaurants Wagamama and Frankie and Berries, agreed to go private in deal valued at $625 million with Apollo Management. We now review stocks leading the gainers list. JP Morgan Chase reported better than expected third quarter earnings after net interest margin expanded and loan loss provisions were less than expected. Wells Fargo reported revenue in third quarter jumped to $20.8 billion and net earnings rose to $5.7 billion, and the company returned $1.5 billion to shareholders in the quarter. Citigroup said third quarter revenues rose 9% to $20 billion and net income edged up 2% to $3.5 billion after institutional clients, personal banking, and wealth management divisions drove the business growth. Delta Airlines said net income in the third quarter jumped 60% after revenue rose 11% on strong domestic and international travel demand. The company plans to pay down $44 billion of its debt by the end of 2023. Walgreens Boots Alliance reported mixed fiscal fourth quarter results and forecasted weak outlook after a sharp drop in COVID-19 vaccine-related activities. PepsiCo reported higher third quarter sales and lifted its full-year outlook after beverage sales in North America rose 8% and Frito-Lay's sales advanced 7%. Südzucker, the world's largest sugar producer based in Germany, revised higher its annual earnings and sales outlook on the strength in its sugar division. Novo Nordisk, the Danish company, said it will stop kidney trials using its drug Ozempic earlier because of promising results. The news pushed down sharply the stocks of other dialysis companies. We now review stocks that are on the losers list. LVMH said French third quarter sales growth slowed to 9% from 17% in the second quarter, and wine and spirit business revenue plunged 14% from a year ago. The French luxury group's announcement sent down all other luxury stocks. Ford Motor Company was in focus after United Auto Workers expanded strikes to a key plant in Kentucky, where the company builds popular SUVs. Humana Inc., the health insurance company, said Chief Executive Bruce Broussard will step down in the second half of 2024. Domino's Pizza, the pizza delivery company, reported weaker than expected earnings and sales at the U.S. comparable locations declined 0.6%. The UK-based emerging market asset management company Ashmore Group said its assets under management declined 8% at the end of its latest quarter. Sartorius AG, the German pharmaceutical and laboratory equipment supplier, reported weak third quarter results and lowered its annual outlook. St. James's Place plc plunged on news that the company is asked by regulators to overhaul its fee structure. Travis Perkins plc, the UK's largest distributor of building materials, said annual earnings are likely to be below the company's forecast. We now review the earnings and economic releases scheduled for the next week. Looking ahead next week in the U.S., investors will review earnings from Bank of America, Procter & Gamble, Tesla, Johnson & Johnson, and Netflix. Investors are also awaiting retail sales, industrial production, housing starts, and existing home sales data. In Europe, investors are looking ahead to inflation reports from Italy and the Eurozone, and construction output and trade balance from the euro area. In Asia, investors are looking forward to third quarter GDP data, retail sales and jobless rate data in China, and inflation and international trade data from Japan. You can read daily U.S. and global market updates, stock movers, and economic updates on ticker.com and 123jump.com. You can also get latest financial books on redera.com and keep up with financial industry and other trade shows on eventsinamerica.com. That's all we have this week, and we will see you next week.